Katie, good to have you on the program. I want to remind everybody where you play in when it comes to these home builders and when it comes to land. You basically have the land and you hold on to it for home builders for when they want to buy it and then build those homes. So you have a great read on what they're thinking. What are they telling you right now? What are you hearing from them?
Yeah, well, as you saw, new home sales came out lower than expected at 580,000, down 7%. But what we're actually seeing is that builders are more bullish than those headlines are suggesting. Our builder clients, where we're financing land to keep it off balance sheet, are aggressively buying finished lots today.
So they're buying land but not building?
Well, so they're buying the land that's ready to build. That suggests that they're very, they're more bullish than what you're seeing there. What is happening is that they are being more disciplined. They're starting less homes and they're going more towards build to order and wanting to build less spec homes, which is why you're seeing starts down as well. But they're definitely bullish, and you see that with the with how they're buying finished lots.
Well,
we're closing on a deal a week.
Katie, that sounds a little K-shaped to me, with the idea that, if they're not building spec, but they're building to order, it seems a little higher end. And there are certainly, across the spectrum, home builders play in different areas. Is it fair to say that the higher end home builders are the ones who are more active right now?
That's a great point, Tim. That's exactly what we're seeing. So the higher end new homes coming in at $950,000 are doing extremely well. People are paying cash and they also have strong personal balance sheets. On the other side, affordability is really plaguing the entry level buyer, and it's very regionalized. The people in coastal cities where you have high land prices, high regulation, it's harder to build. Those entry-level homes are just pricing people out, and so they're going into more affordable markets.
So basically they're building for a sure thing.
Yes. So the builders that have been able to, like Lennar, like D.R. Horton, you see them, they're adjusting, they're building smaller homes, they're offering financing incentives. They're doing very well because they're delivering that affordability in markets where people can still afford that monthly payment. But there are 268 cities in the US where the entry-level house is now $1 million. Most of those are in California and New York, and that's just pricing people out. Not that people don't want to live there, they just can't afford it.
Great if you own it, but great if you don't. I mean, not so great if you don't. Yeah. Hey, one of the things I want to ask you, Katie, is President Trump canceling plans to sign that bipartisan bill aimed at lowering housing costs and increasing supply, basically looking to make housing more affordable. This has to do with politics, but having said that, remind us about your view on this and the impact it may have on the housing market from your vantage point. And I say that having been at Milken in May and doing a real estate panel with home builders and those in the industry, maybe not so keen on this and having limitations for investors to be involved. What's your view and how this might impact the housing market?
Yeah, I mean, it's definitely good to see both sides of the aisle address the supply issue. We really are undersupplied, but at the federal level, it's hard to really make a big impact on supply. It's really more at the local level where you can affect supply through improved, permitting, faster zoning, and deregulation. So that's, it's still up in the air of how it's going to land. But institutional investors right now own less than 1% of homes. At the peak in 2022, they owned 3% of homes. So what we're waiting for is there's a lot of build-to-rent developers that are on the sidelines waiting to see how this shakes out to get back in and unlock some capital, which will help the supply problem as well.
Is anything on the local level that you mentioned, the permitting or anything, at least when it comes to the way people feel about zoning on the local level, is that happening in any part of the country right now?
Well, I mean, especially this bill, it could help with environmental deregulation. There's also some provisions currently in it that would help with smaller banks improve their lending capabilities, also deregulating manufactured housing. So at the local level, we really need federal funding to incentivize local governments to speed up zoning. Because if you spend 3 to 5 years trying to get land zoned for the approvals, that alone adds thousands of dollars per house. That's a more significant impact to housing affordability than a 50 basis point rate cut's going to be.
So bottom line, with the president is trying to sign this bill, that's not really necessarily going to make housing lower. I mean, we are always reminded it's, location, location, location. It's all specific on a state, a city, between zoning and so on and so forth. That's really what comes down to it in terms of supply and pricing, whatever the economy bears, right?
That's right. I mean, anything that we can do to make mortgages more available and improve affordability helps, but that's not really going to fix the supply issue at the national level. Like you said, Carol, it's local.
I mean, I feel like we have this conversation whenever we're talking. Like, you can do whatever you want at the federal level, but unless those laws, regulations, environmental rules, zoning, and you get people to say, we are okay, and by people I mean voters, we are okay with increasing density in certain parts, you're not going to move forward with fixing the problem in this country.
Exactly. And that's why you continue to see the South, Texas, Florida, the Carolinas continue to dominate in new homes because they have less regulation. They still have, affordable markets where it's the cities and the locations that have great land parcels, but just too much regulation to make it worth the builder's time. It adds years of cost and it's just too expensive.
Katie, in a lot of parts of California, they seem to be making a dent with this idea of the ADUs, the accessory dwelling units, and taking a lot and adding a 2 or 3 bedroom home. In some cases, you can add a pretty big home depending on the lot size. Is that actually making a dent?
We are starting to see some additional developers who were not able to make deals pencil before. Now they're coming back to the table and saying, okay, if I can improve density myself through ADUs, it definitely could help.
That's wild. Like, you see stuff on social about that too. And it's just amazing, like the homes being put everywhere and anywhere. I am curious, Katie, from the clients that you guys talk to, the home builders, what is top of mind for them? Is it the rate environment? Is it policy, legislation? Is it labor costs? Is it material costs? What is it also?
Yeah, I mean, at the local level, definitely if we could get some type of incentives for local municipalities to either approve or deny zoning in 90 or 120 days without dragging it out, that would help. Certainly, so shortening that time, which reduces costs and reduces their carrying costs on their land assets. They're also really continuing to adjust the type of homes, building smaller homes and building what product people are looking for. It's not that people are going and looking and shopping for incentives. They're really shopping for an improved quality of life at a payment that they can afford. And so builders that are delivering that and buying down the mortgage rates are still doing well, as evidenced by Lennar recently is still building and delivering 20,000 homes a quarter, which is it's incredible, but they're doing it on purpose, eating into their margins to deliver that volume.